Hello, this is a tradesight trade recap from Thursday, May 2nd, 2013. Wanted to walk you through a Google trade that we took with our tradesight subscribers. I'm going to show you what motivated us to take the call, what led us to the call, and how we managed the call using some of the tools that we use on the powerful eSignal 11 platform. So let's start out by looking at the NASDAQ 100. Now keep in mind, this is Wednesday's action in 5-minute bars leading into Thursday's first bar gap up opening that you see right here. And we did have a 2-day Fed meeting this week, so all week long we were kind of considering that Thursday would be the more exciting trading day of the week for us. The market tends to be fairly dull while the Fed's doing their business, and we wanted to concentrate on what was going to happen after that. And you can see here on Wednesday afternoon, after the announcement came out, markets did sell off a bit, but not dramatically, kind of reversed on the last bar. And so Thursday morning we get a gap up. Now let's concentrate on this purple line. This is the upper pressure threshold on the NASDAQ 100 NQ futures contract. And the way this purple pressure level works is if you gap over it, it becomes very hard to break back under that level. We use it all the time in trading in futures. And if you stay underneath that level for the open, typically you're more likely to go back and fill the gap. The key here is if you start under that level and at some point break through that level very strongly, it usually indicates more upward to go. So take a look at this opening bar. We did open below that purple line, but we broke right through it, and we were already on alert for strength in the market right out of the gate. Now if I move forward a bar or two, you're going to see the very next bar was a big bar up, as we would expect, breaking through that purple line, and the rest of the session played out pretty much to the upside because of it. So early on we were on alert for upward movement in the market. That means that we're looking for stocks and patterns on stocks that are on the long side. Now here's a look at Google, and Google's opening bar was strong as well. So the call that we made at the time to our subscribers was to buy over 824.81, which was the high of the prior day. Okay, and if you watch this as we play this forward, the setup is that we come up right to that level, pause, okay, and that's the 824.81, and then we break through it about 5 bars into the session, so about 20 to 25 minutes into the session. So there's our trigger, and we're long Google. Now, from here we're going to use our Comer tool to help manage the trade. So we do tend to sell half of a stock like Google for about a point. So in this case, that was achieved very quickly, and now we can hold on to the second half of the trade with a stop under the entry, and as you can see, okay, we've got a little basing action above that entry. Now at this point, as we pushed higher, we have what's called a 9-bar setup. That's the 1 through 9 yellow numbers that you see on the chart. Okay, and that means that from that point forward, we are doing what's called a Comer count, looking for an exhaustion point in the market. And you're going to hear a loud sound again when we reach that point. But it helps keep us in the trade. Yes, we still move a stop up underneath as we go, but let's see if we can figure out what the top is on Google for the day. So here we are, we're around 828 from our 824.81 entry. And let's just watch as this thing plays forward. Now each of these bar counts that you're getting in the pink or magenta color, that's part of our Comer signal. So when we get to a 13, using that particular mechanism, which is a 2-bar look back mechanism, there's some variables that go with it. If you're not familiar, you can find the information with us here on the tradesight site. But we're looking for that to get to a 13 to potentially recognize the high area on the chart. So here, as you can see, even when we're doing our sideways basing action here, and yes, we've moved a stop up at this point as the stock's now at 830, okay, we're still looking for potentially a 13. Now there's your 9, there's your 10, here comes your 11, there's your 12, and there's your 13. And you get your sound alert to let you know that you've got a sell signal up here at 13. You'll also notice that right above the 13, we have a very specific mechanical measurement for what's called a risk line. That's this pink line up here. That sort of means, for those who use these as signals of reversal, if you were to sell short Google up here, your stop would basically go over that risk line. That's the theory. It also means that this general area is the top, but we could still stretch as high as that risk line and not really have violated the signal. Now let's see how the rest of the day plays out against that signal. Okay, let's take a good look at it. Tried to reach up a little higher, could not do it. Came back. Now we're coasting into the last piece of the trading day. Okay, see how that worked? So we end up, and yes, we'll stretch here. Got another 9-bar move to the upside right there. That causes another sound alert for us. Just can't get through that general area. So at this point, you really didn't need to be in this stock past around the point of the 13. Now we can move our stop up. You know, this drop right here would have probably taken you out, if not sooner. But the signal definitely called the high area of the stock for the trading session. And keep in mind that that's almost at 834. You're looking at a 9-point winner in Google. So again, nice profitable trade for us. Real easy signals using our futures pressure threshold, a general chart pattern for entry on Google, and then the Comer tool to help you get out at the right place. Stick with that trade until you get that signal on the Comer. You'll do really well.